evening, peoples. It is Bruce with Targeted Wealth Creation. Let me jump in on NEOS, their declarations as of 11/4. I'm not even sure right now what the payment is, but I know most of you guys keep up with that, so I'm not even gonna deal with that for the moment. Got a lot of things going on here. Let me try to knock this out. All right. Um, Here's the actual distributions. And they are, I'll just go out to Rex while I'm doing this, and you guys can read them there. Rex shares. Yeah, it looks to be. Why don't they just put it in plain English so you can see it instead of all this BS stuff? All right, I'm talking to myself, guys. Just too many things going on. Let me go see if I can find this in a different source because I hate when somebody doesn't know. All right. So take back what I said. These are declared on 11/3. So this is late night 11/3. So can't buy them now. They're one of the funds that do that. I'm not a fan of that approach at all, Rex, if you're listening. You know, treat your customers the way you would be treated. If you want them to buy, give the information at least the day or the early morning of the declaration date. And I don't see it them doing that way. So those of you that have these funds, maybe you can mention that to Rex. The more people that tell them input, the more likely they may be to respond. They're not the biggest by any means, and they're not going to get there unless they take some extra precaution and do things that help the investor. It's always about the investor, and so many of these companies don't do that. Okay. So let's jump in now. So here's the distributions. Current distribution for underlying MicroStrategy 0.0815. Current yield 28.78. I updated these. Previous distribution last week 7 cents, right, which yielded 22.29. So the yield percentage jumped up 6.49. How about the Coinbase underlying for Rex? Well, they paid 12.77, which is a 28.99% distribution, as opposed to last week distributing a yield of 10.85 cents, which was 23.13. So they increased that yield percentage by 5.86. So we got a 6% increase, 6.5, almost a 6. We go to Nvidia, which went up, not a lot, went up 28.6 cents or paid 28.6 cents versus 0.2711. So about a penny and a half, which represented about a 4-point distribution yield increase. 3.85 to be exact. I paid 47.77 versus the previous week of 43.92. And Tesla is sort of the winner in yield, and also in the amount. Paid almost 42 cents, 0.4198. Previous week they had paid 36 cents, so they went from a 74% distribution yield from 63.70, and that was over a 10.5% increase in yield. All right, as you guys know, I love to do comparisons. Well, I love to do it because I think it's helpful. I don't just love to do it. It's very, I'll tell you, when I have to do it the way I have to do it, it's a lot of extra work, but I enjoy the outcome and I know it's appreciated. So what I mean by that is let's go out and take all the Nvidia competitors, right? These are the companies that use a Nvidia underlying and produce a high yield income. Not exclusive. Sometimes I leave somebody out that came in. I don't know, like if Defiance has now got one and I'm not covering them. To me, the Defiance and the Granite, even though I like them at times, are the Navi rotors, Defiance being the worst. And and Granite being up there, but I think Granite is paying more. So again, you can't paint a stripe on someone and call them that at all because sometimes Granite wins total return. So I give credit where credit is due. But just looking at the NVIDIA fund, so where the work comes in, guys, you see all these different declaration dates, launch dates. These are the real, well, they aren't the real launch dates because NVIDIA did not launch on 2/19. So again, I always say this and a few people don't listen. You have to compare the same time frame in a market if you want to compare total return. It's not fair to go in and look at, you know, Misty in 1924 or 19 in 2024 for its distribution yield and its NAV increase or decrease because 2024 is not 2025. We all know that's turned south. So if I tried to, if there was another Misty fund on MSTR, which there really wasn't in 2024, then you would have to compare like time frames, say June to December. Because the minute you take January to June, it's going to be a different performance in the market. Therefore, your total return, you haven't seen how a fund handles up movement and down movement. So if you have a long enough time base and they're the same time base, then you can really compare. So I always tell people that. So I go back and I go, where can I get the majority of the funds, right? NVIDIA itself, if I want to look at them, they've been around for a long time too. So them and NVIDIA go back into probably 2023, if not early 2024. I don't remember the launch date of NVIDIA. Okay. But I know that it was there for pretty much all of 24 and 2025. So, in order to then get Roundhill, who's an excellent performer, I can only go back to 219. So at least I can grab three funds. But the minute I want to look at Rex, which is popular funds, right? The NVII and Granite in NVYY. So those both launched in May and even different dates, May 28 and May 13. So you notice I come down here and I do all the funds for at 528 because now we have the same time in the market. I don't need to do NVIDIA exactly. You guys, everybody knows almost always the growth side does better than the income fund. That's part of the trade-off. All right. But when I get them all here in the same time frame, it's a true test. So this one is back and forth, back and forth. So Rex right now is leading uh, Roundhills in VDW. So good job, Rex. Okay. Now just give us a declaration ahead of time on your fund, right? The morning of would be ideal, like other people that do good things. All right. So what do we see the differences? So up here, I can go through the individual funds all of 219 and say, okay, the growth fund won at 75. Well, it didn't really win. It did 75.11, but because they paid a lot in Rex, okay, well, they didn't pay the most. Granite paid the most, but Granite eroded. And look here at NVII, they did not. So you win by having a stable NAV. Not only do they have a stable NAV, they grew. So from five, but again, that's part of being the 528 date. So let's jump down here. They did 153. You see it again here. But look, NVDW was only a 50%, 53%. Why? Because starting on 219, when I move in NVDW to 528, it's 135.2. Now, what it's doing, so you want to look at the two leaders and say, okay, 528 is the only comparable time for all of them. And they won by out navving, right? By out gaining on NVDW. And that's something to be said because they're using 120% leverage. So obviously these guys are doing some good things in NVII at Rex. Okay. Let's give credit where credit is due. But it's not far away. right? Now let's look at dividend. You're going to get more money along the way because they paid out 30.37% versus 22%. Call it 30 and a half versus that's about 9.5% difference. That money gets utilized along the way. Now, probably if it was pure greed, I'd still probably go with NVII, but you do have to, that probably moves it up to around 145% in my mind. So it's getting close. I'd keep an eye on both these. If you own one over the other, consider that they're almost equals, right? This one seems to get the NAV much better, and they pay another 20% higher, right? Now, you want the highest payer of all? Right there, no question. A lot of you chase that yield. But how you doing? You're actually fourth place. You're better off in Nvii, right, from YieldMax. And I don't say that often, right? But on certain funds, okay, and that's Granite's problem, in my opinion, in certain parts. Not always. I like them. Not like they're a horrible fund. Like I've said, they win sometimes. But just keep that in mind. But the best of all is at least they're all competing here. There's not this is an outperformance. 135 and 153 beats 87 and 93 all day long. There's no reason to be in these funds if this is going to be the future. These two, okay? And then these two get there in different ways, right? These guys pay massively. Look at that. Almost they're paying double what Rex is paying. But look what it's costing them. They went up 103% on their NAV, right? They went from $25 to $34. These guys went from $25 to $24, right? But when it's 160 days, that creates an 11% drop. It might only be a 5% drop here, but when you project it out, it's 11.58. So some of these projection things will change subtly over time, right? This is very likely to shrink. They're unlikely. I mean, NVIDIA'd have to go from its 5 trillion to 6 trillion and just really run for NVII to keep capturing. So I give you a lot of food for thought here, guys. That's what this detail. But every time I do this and I change, then I have to go and take their dividends and then recalculate which ones apply to the new dates. And then sometimes there's a lot of partials where I have to prorate, right? So if I'm using 528 and a fund pays on 515 and 615, then I have to go and say, okay, they launched on 528. How many days toward the 615 payment of the month did they get? And then prorate that month's portion of the payment. Because that's how I am. When I do these comparisons, I like to dive down into the detail and get it right. Okay. That's important. It's important to compare apples to apples, oranges to oranges. All right. And then you can look at funds, right? I can say, hey, who won on Tesla and who won on Nvidia and who's the biggest percent distributor? Well, look, TSII contributed over the last, well, actually, you notice the difference here. Why is this showing 153? Oh, yeah, 528. See, they launched these on different dates. It looks like they got their NVII fund out early, unless I made a mistake, but I don't believe so. It would only be 6 days. All right. Um, so let's jump to Tesla. So here we are, guys. We got TSLW. But again, this is that first one where I lumped everybody in here. I went and I got Curve, right? Because Curve doesn't have an NVIDIA fund unless they've recently launched it. So I got everybody in here, but this one is, they got an outperformance, right? Otherwise, you had the underlying doing 44 and they did 119. But guess what? The underlying probably did really good just in that 6-4 time frame. I didn't bother to put them back in here. So again, when it's not apples to apples, it's almost useless. Everybody was that except for this one. So the winner since 2019 would really be TSLP. They would have done the curve fund would have done 21.22 to 18.31 by Roundhill, right? And then Tesla would have been in third with 15. And then again, what happens here with Granite and that longer? They're coming up the rear because they're eroding more. All right. So and these are positive numbers here, but it really doesn't matter for the sake of I'm not analyzing that. Here's where the competition starts to get in, right? So now you've got a scenario where we're checking out everybody's payments. Let me look at this and see where this is picking it up. J17, okay, Q25, no problem with that. Tesla. Yeah, because, well, let me double check these guys. Oh, I should be using the numbers right over here. Yeah, I am. That's fine. Yeah, 24, 25. Okay. No problem. I purposely changed the way I'm doing it or where I located the data. All right, so on Tesla, we get down to a competitive situation where Rex once again wins and second place goes to TSLW. They're closer, but I'd say the spread, this is a good 35%, not quite 35, like 34.80, rounded to 35% better performer. And guess where it's getting at? It's not outpaying. Roundhill is outpaying them. TSYY is really outpaying them, right? 2 to 1. This one is another 0.5% better. So you want 50% better? Do you want 100% better? Well, I'd take 50% better because it's going to give me 84%. Okay. And then Tesla is in really third place. So my taking up the rear in this case is the Granite TSYY fund since 6.4, guys. So you follow my logic. I try and show you a winner out here when I get the scenario down, right? I showed you two because they were fairly close. I didn't need to do that here. All right, let's look at, and this is a loser right now, any way we look at it. I mean, these are horrible, right? But at least we have a winner if you want to look at it. Who did, it's like saying I got five really ugly sisters, which, if you loved your sisters, you'd probably never say that. But if somebody outward said, boy, those girls living next door, there's some ugly sisters. Well, is there one that's better looking of the ugly sisters? I'm sure there is, right? And it could be boys, right? Who's the ugliest of who's the best looking of the five ugly boys? So I'm not picking on girls here. Um, but that's your scenario, minus 13%. Now, I could not get MSTW because it wasn't there, right? Roundhill came another 50 days later. So is that really a fair comparison? No, I suspect they'd be much more competitive had they been there. So by the time we get to January or February, I'll move all these start dates to 724 unless we have some new players, and I'll just play everybody off 724. But right now, I'm not doing that, right? It's not the work level to do it. It's just I don't need to do that, right? This one's probably not going to win. Would be interesting. All right. So, yeah, because there's no way that Roundhill is eroding what MST is eroding. They got 120% leverage. They have 200% leverage, right? That's why they're eroding so bad, and they're the second. Now, look at this, though. Look at your Rex. Rex is not getting it done on this particular fund, right? It shows you how this stuff works and doesn't work. Well, the winner is doing it just by outsized payments, right? The Bitwise funds do that sometimes. So on their IMST, what did they come out with? And then you look, they paid $14. It's more than double anybody else. Now, that's overall. That's not in this sequence, right? They didn't get that done. They paid 21.91. Sorry, it is in that sequence. They paid 21.91 if you go back and look at them. $7, $1.80, 2.90, 3.40, 3.75, right? And let's see what the price of the fund is. Price of the fund now is only, it's gone down. Look at this. So it started at $46 on inception back in April. Again, we got dates all over the place. We really only have Misty and MSTR. So we don't even have anything to compare. So Misty was only minus 0.06, whereas these guys were down. But again, it's unfair comparison. You don't have equal funds there. So let's skip that and let's focus on this one. So in this case, Rex didn't really get it done. So from 6.4, they've only paid $3.11. And that's hard to beat a fund. I mean, I don't know why they're losing so bad. That would be an interesting thing to go down and look at this and say, hey, MST is paying one of the top yields, not the top, because you get that from at the 68.53%, right? $14. But they've nav eroded massively, right? 81%, you know. Misty's at 82% in the same time frame. And then we don't really have a granite share there to compare. That would be another one that we might look at. But we have the 200% leveraged Defiance Fund, MST. All right, guys, let's take a look at these. This is, I wouldn't call it closer, but this is a case of bitwise. So I need to change this one, guys. Let me make this one. Hang on. Okay. So Coii from Bitwise wins this one. And look at this distribution yield, right? From 6.4. It's just wild. 26.88, right? So when you go over here and you start looking, right? This is a prorated. They paid like four something, and I prorated it at 374 because they only captured like 2/3 of the days. And then they had a 924, a 516, a 4792, and a three. Now remember, this is a monthly. So these guys pay like nobody pays practically. Although here's your monthlies. Now they came in, Coii came in late, right? They came in 729, but they are a big payer, but even they pale in comparison. Look at this, 155% if you annualize it. This 258%. I imagine they're getting some performance out of it. They can't afford to do that forever because the fund would, just have massive NAV erosion. It is having 77% NAV erosion. And this one's got 90, but again, that's on a shorter period of time. Does it get better or not? It depends on the performance. So again, we can't compare. It's the same problem we had with the other um, Granite Shares fund, where it just wasn't available on 6.4. So that's part of what we do. And again, maybe January, I change these all and start them all on 729. That's not going to change right now based on the outcome. So you got an outlier in Coii. They just pay massively. They erode massively, right? And you only went down 19.51% on Coinbase since 6.4. It went down 77, but it didn't matter. They paid 258. They paid the actual dividend return 108% versus 108.5 versus 65%. So I know some of you guys are in these funds, you know. Again, these two are the winner by far. I guess I need to go back and look at Bitwise and understand Jeff Park and see what all they're doing to get these, extract these big dividends to see. And we need to go through the yearly cycle, right? Now that we move into November, not everybody's on the same fiscal year. Some of the companies are on calendar fiscal years. Some of them are on, October 31st fiscal years. So that can affect the return on capital. There was a lot. If you look in 2024, a lot of people were surprised at yield max. I owned a lot of the funds during, when I did my 2025 taxes for 2024. I owned a lot of Misty, a lot of Coney, you know, uh, uh, some other funds, but in particularly, Coney and many others had ROC, right? There was a certain percentage in my taxable account that was excluded. Now it increases your tax base once you sell it out, right? But usually, if you want that to be a long-term gain, then you move that taxable amount into a long-term gain. Whereas your dividends, when they aren't ROC, those, especially in the US, those are all just, regular tax, whatever your regular income for that tax year is. Okay. But your long-term gains get a tax advantage. And so ROC, when it's there, takes it out of the dividend immediate tax bucket and says, don't worry about it for now. When you sell the stock, we're going to increase your gain by the total of those distributions that were ROC, guys. But a lot of you know that once you've done 100% of ROC, then you no longer get that short term tax benefit if you haven't sold. And then you do have a bigger hit on your capital gain, but it would be in the long-term capital gain category. And in US tax law, that's taxed much cheaper than a short-term or ordinary income is taxed. All right, sorry for some of you may not understand that. Max has some decent stuff on it, these funds, but so my point was on Misty for 2024, it wasn't until March that I found out, getting ready to file the taxes, that in fact there was no ROC benefit at all during the tax year for Misty. Right? Would have been nice. I didn't buy it based on that, but it would have saved some taxable income. But we had it on Coney and I had it on other funds that I own at EOMax. Now I'm almost exclusively out. I got a few shares of GDXY and a few small under 1,000 shares of Ulti, and I'll be selling that ASAP. And I've already sold out my GDXY, which I had from Origin, okay, and moved that into GDXW. And I suggest you do the same. That will be a better fund as I see GDX going much higher over time in the gold and silver super cycle, okay, commodity super cycle, really. And gold and silver just happen to be participating in that commodity super cycle. And therefore, if you're really bullish on something, you want leverage. In other words, you have higher highs and higher highs and lower highs instead of the other way around, just like an Nvii and for a long time MSTR was higher highs and higher lows. Now you're seeing the opposite, lower highs and lower lows in an MSTR and your MSTR based funds. All right, guys, if you want to know more about the commodity super cycle, that's where I do a lot of deep dive on who the winners are, which stocks to pick, how's this cycle going? What are my targets? I put out lists of 25 expected 10 baggers over the next 4 to 5 years in the commodity super cycle. So you're not going to see that kind of data many places with the expertise behind it. So come over there on Patreon, check us out. We're up to a couple, I'm up to about 225 members now, and that's growing. For those of you that need help, even on the high income funds, although I'm going to tell you and suggest you probably 60% of the funds you ought to be in are in the commodity super cycle. We still don't have enough, but they're growing. Okay. So come over there, check that out. Again, this is Bruce with Targeted Wealth Creation. This is not financial advice. I am not a financial advisor. Enjoy, guys. Bye for now.